And welcome back, everyone, to another episode of the RLT Pivot Podcast. So glad you could join us. My name is Tracy, and once again, I am joined with my amazing co-host, Mr. Dan Jansen. How are you doing, sir?
What is happening? Good to be back on another episode of the Pivot Podcast. Glad to be kicking off May with this topic. We hear this a lot as far as sell in May, go away. What does that mean, Tracy? what are people talking about?
Pack it up and go on vacation. The volume just peters out over the summertime, and that can be a difficult scenario to trade in. We love volatility and we love volume. That's what really makes things happen. So when things die down, a couple of things can happen. Either you get low liquidity, which is not a very good thing, or you end up with just no movement at all, no volatility. So let's tackle the first one, which is just low volume in general and no activity. How do you go about changing up what you do? Do you pack it in for the summer? Do you look for different stocks? What are your tactics?
In theory, yeah, that would make tons of sense. But I'm too hooked. I'm too hooked in the markets. But yeah, so you're going to. I don't think necessarily it means like everybody should just stop trading. I get it if you do, but there's definitely money to be made in slow markets. Generally, that's what that means. Is you have people away on vacations. You have them traveling. You have not as much. Not as many people in general looking at their computer screens. Same with hedge funds. They're a little slower in summer. But what that really means is during those times, just for me, that means to take less trades, right? So take less trades. Look for those catalysts in the morning from breaking news that morning or breaking news the night before. We still have an earnings season during the summer as well. That's typically still a fun time to trade, but really it does slow down a lot. And then usually around September, it picks up again in terms of volume, and things are pretty much consistent, I would say, back until February, March, something like that. You do see sometimes in the market where things could get crazy, which 2020, we saw COVID, like the whole summer was packed with heavy volume because, again, there was overall news that was coming out that affected the entire market. So it's not a blanket statement forever, but generally, historically, we've seen lower volume coming during those certain time frames.
Yeah, not only that, the lockdown, so people weren't going on vacation. So what were they going to do? But they were going to stay. Exactly,
go,
right?
So that I didn't even think about that, but that helps.
Yeah, for sure.
That helps increase volatility.
But that being said, when the volume does peter out, when it starts to lower itself, and this includes lunchtime even, right? You need to be more cautious of the lack of liquidity, and what that can cause is bigger slippage. So if you're not aware of the spreads that are happening and how big those spreads are widening when people are on vacation, when the liquidity starts to dry up, that can really start to wick you in and out of trades that essentially might work, but you're just playing them a little bit too tightly because you're not taking into consideration some of the expansion that happens with that, with those spreads. So that's one of the things that I really pay attention to during the summertime is how much those spreads have changed, right?
Yeah, correct. Yeah, the spreads definitely widen a little bit, and the market is a little bit more prone to. I know I don't like to say the word manipulation, but you can manipulate the market. It's the same thing if you're talking large cap companies versus small cap companies. The companies in the small cap probably have less volume, and it's a lot easier for a hedge fund or somebody just pump and dumping stocks through emails or however they're still doing it. It's just easier because there's less volume, less people to push around, not as much resistance at certain levels, and it does make it a little tougher to sometimes trade those stocks. And then if you do get stopped, the spreads are wider and you're losing less than an hour on trades and things like that. So it does become a little bit wonky in the market in general. But I agree. I mean, like I said, for me, my strategy is primarily stick with stocks that have a reason to move, why people might get excited about those stocks, something in the range of earnings reports coming out, or CEO got changed up, or some in those terms will definitely be catalyst to help move the markets or that individual stock. And then the rest of the market, it'll still move. There's still range in the market. It's just a little bit different style of trading.
And I like that. I like that you slow things down a little bit in the summertime. So that's good. I mean, we need to take a break too. So it's a perfect time for us to schedule a little bit more outside time and get out there and do that, right? Now, do you go on vacation at all?
I try to. Yep, I do. I try to, but I try to not over vacation as well.
Okay.
For me, then like I got everybody like, hey, let's go here. And then I'm like, I would love to go everywhere, but at the same time, I like to also be at home. I like to relax a little bit. Like to
You like to trade.
enjoy some time in the house as well. So
Yeah.
for yeah, I'll try to pick and choose, but I do go away a few times a year.
All right. Now, when you go on vacation, do you trade?
Yeah, that's a good question. If the wife's not looking, I'll try to get a couple trades in. Yeah, for sure. Yeah, no. So when I'm away on vacation, I'll typically trade, but I'm only trading again, and that goes for winter months and fall season and stuff like that too. I'll probably be trying to just pick the heaviest volatility times. So as soon as the market opens, first
Mhm.
2 hours a day, hour and a half, try to hit a one or two winning trades and then call it a day and enjoy the actual trip. But in some sense, I will still look at the market throughout the day. Just not going to be placing trades unless there's something just purely obvious to me and
Right.
like I have to be in that trade. But otherwise, if I go away, I try to go away.
Gotcha. Now, I have a quick question for you regarding the low liquidity in a market. Do you change up kind of how you put your entries in due to possibly an increase in skipping or skips getting skipped on your entries? Because I find that
Yeah, that's
happens
a
a
good
lot,
question.
right?
Yeah, and I feel like in the summer it's probably a little bit more
Hmm.
frequent. For me, I don't mind missing trades, so I won't for just my own personal and even during some of the busier, higher volatility markets. I know some people will change how they put their stops in their stop limits. For me, I if I get skipped, I get skipped. I have a view of if it's not meant to be, it's not meant to be. Whether I miss it or not, that's just how the cards land that day. So for me, I won't change exactly how my orders are set. I'll still do the same way. And again, if I'm looking for that one or two trades for that day, early morning, and just so happens I get skipped on both, I'll just head to the beach a little bit earlier.
Fair enough. Love it. I love it. So, what are some of the other tips that you might give for somebody that is looking to play during the summer or trade during the summer that is contending with low liquidity and low volume?
Yep. My thought would just be extra selective, and I don't know that if you shouldn't look at the summer as training for the busy season.
Mm,
So just because the volatility picks up, things are going crazy, news coming out all the time, every 12 minutes, it doesn't mean you have to be in every trade. And uh, a lot of the traders I talk to, they're solid traders. They've taken the courses. They understand the sentiment behind candles. And one of the biggest things I see is just the over trading in general. So the summer, if you're over trading in the summer, it's going to be very, very difficult to like things that should just be working or not hitting targets, things that uh, you don't think you should get stopped out. They're getting stopped out. But be selective in what you want to take, and then also use the summer to build that discipline going into the bigger season. Because if everybody right now listening to this podcast looks at their trading journal in the last 3 months, how many days could you honestly say like, yeah, I did an overtrade or I took this trade didn't really quite fit my plan or things like that. But if you had the right discipline, and it's tough to do, but if you have the right discipline, you could say, well, if I just stuck to the plan, or I just waited for that one extra signal I like, or I have a max of 4 trades a day, and I'm taking 6, 7 trades, and if I cut back, where would that P&L be for the year? And I think if we look at that, that will help people to realize, yeah, I should probably just be. I can still trade, just take less trades, be very specific, intentional with the trades as to why you're taking them. And I think the summer can help like training season into the busier season. And again, during the summer, you still have the volatility periods, especially during like I said, earnings season comes out. There's usually one big week, but usually about 2-3 weeks in the summer, you'll see some stocks move, sectors move, pretty big. And I don't know what this summer is going to bring because we still have war going on. We still have inflation. We still have Fed meetings, things like that coming up. So this summer you might have little pockets that are really nice for day trading, and then other times just be selective and slow.
I love that. The summer as the training for the, the regular session or the regular season. I love that because it is difficult to sit and not be in a trade and still be watching the markets looking for a trade. And when things are slow and setups aren't showing up the way you want them, it can be a challenge. And that really, if you don't know how to handle it, or if you're not used to it, that's really where a lot of overtrading can come in. You start taking crap trades. You start taking just about anything because you just want to be in something. And that's a terrible place to be in. So that's a great opportunity to really practice some restraint. And I love that. I think that's great. That's a really good takeaway from here for everybody that's listening, to use the summer as a training ground for the active season. That's perfect.
Yeah, it's the same thing. If you go to a casino, it's very difficult not to at least sit down at one slot machine. The market's open. You get the excitement of everybody, like, oh, we're making money, or things are moving. There's news breaking out. Trades that you might have taken, you were just extra patient on, you missed them, didn't place a trade, and now you have that, man, if I just did this, or if I changed that a little bit, I could have. And you start to get into your own head a little bit and change up really the type of trader that you've been practicing to be, and you're out there in a live market just throwing chips on a table and hopefully things hit. And that's not really where you want to be. You want to be a more disciplined, focused trader if you want to do this consistently.
Yeah, for sure.
Be profitable consistently.
For sure. Now, you as a moderator have typically been in the afternoon room. So you take a lot more afternoon trades, at least when you're moderating. I personally don't like trading in the afternoon. So I don't really have a lot of experience to pull off of right now with this question. But do you notice a significant change in the afternoon during the summertime for trades, successful trades, things that just flatten out and just kind of stay flat for the rest of the day?
Yeah, so I would say I'm in the morning rooms, and then the afternoons, at least recently for a decent amount. And for instance, Wednesdays, I was there from 9 a.m. until 2 p.m. when that room was closing. So even on that just one day, taking a smaller sample size, you would see a lot more trades come through from 9 a.m. to 11 a.m. or 9:30 a.m. to 11:30, something like that. The first hour and a half, 2 hours, and then just inherently with not because we're not looking for setups or anything like that. Just there's a lot less setups to take. What I do find is trades in the afternoon, you get more distance out of them. So a lot of times, if you have, because a lot of times you're trying to catch the reversals on trades, things that just got overbought, oversold, playing it the opposite direction, and a lot of times you could get some really nice trades in that time frame, but you have to sit through sometimes bigger pullbacks. You have to typically have wider stops on trades, and I would say you're looking for more of, I'm looking to get into a trade 12:30, like 12 noon, 12:30ish, and you're planning on being in that trade for a little bit. Switch, for me, the biggest thing is switch to a longer time frame. So if you're trading the opening at 3-minute time frames, have a 5-minute, have a 15-minute, give yourself some time for the trade to actually develop work, because it usually will be on that trend. There's not that much fighting in the opposite direction that you might see at the early morning when there's just so much confusion as is this market going up today or down today. The market itself already kind of picked which direction, and you're just more or less taking advantage of if that market got beaten up in one way or the other too much, and you're playing the reversals on it. So in the summer, compared to like the summer afternoon trading compared to the afternoons in a higher volatility, yeah, it's again, it just comes down to being selective. I think it's all relative. I think the morning is going to be a little slower in a slower season, the summer, than it would be in a winter month with higher volatility. And then I would expect the same for afternoon and summer to kind of relate. So again, it's just about having those wider targets, having an understanding of where a trade could go, why it could go, how much resistance is in the way, and just letting that trade develop.
Right. Absolutely. Now, do you rely a lot on volume?
Yeah, I pretty much use volume all the time. I know you're a big advocate of volume as well. So I think volume is the key that tells you exactly. You could get so much information from volume. So like if you're using the VPOCs like you use all the time, you know at what range that pricing the price has to be protected at, or where people might be coming in for some kind of support. And if you're looking at volume, which is probably the most standard volume on charts, you're getting the volume of candles. So at least you know around what time there's interest coming into the market. Not so much exactly the price, but I think the volume is huge as far as when things are getting some kind of steam for you to take advantage of.
Yeah, and I find that it becomes less reliable when we've got low volume times.
Right.
And that's the thing. So the price action and the volume can diverge, I think, at that particular moment in time. So price can be moving up, but volume isn't really indicating that there's any reason for it. And really, I think there's it's important for people to understand that there's few different reasons why the price can move up. You can move up because there's no sellers, and you can move up because you've got really aggressive buyers. And the movement is the same, but the reasons behind the movement or the intention of the movement is very, very different. And when we start to get into those low liquidity markets or the low volume markets, that's exactly what ends up happening is price will move, it'll range, it'll head up in a direction or it'll head down in a direction, and it'll make a decent move, but not because of the volume. It could do it because of a lack of interest at that particular price level, and it has to move to the price where there's going to be activity. And that's what ends up driving the price up or down. And recognizing the difference is huge, I think, in understanding more sentiment behind the market and being able to determine whether you should be getting in and getting out during those trades. So volume it's important, but what you're learning from it is a little bit different, if that makes sense.
Right. Yeah. You just have to interpret the volume a little bit differently in different markets, which I think is fair. And then with VPOC though, so I know you use the VPOC a lot, which is all volume, and you're a huge volume trader. For you, how does your summer months differ from your let's say, I'll say winter months, but really higher volatility months?
Again, what I find is during the summer months, some of those points become more precise. And the reason being is a lot of the big fish investors, they're not looking to get in at, say, a 10 EMA on a daily intraday chart. They're buying at price points or at levels that they want to get in, or around volume points. So what I find is that, it might hit that point of control right by the penny and then reverse. And it's more the retail traders that are in control at that point, and you have less institutional traders that are trading. That's what I find anyway. It becomes more precise at those points. Does it get defended at that particular point? That maybe the daily ones do, but the weekly points or the monthly points, some of the bigger time frame, unless you've got the big investors there, they don't hold up as strongly. It usually comes in because those are the bigger fish. You need to have the people that are going to defend those positions to be sitting there ready to defend them again. Does that make sense?
Yeah, 100%.
That's for me anyway. That's what I find. So do I change anything? No, I don't. I still I trade the same way that I do all the time, just like you do. And I back trade it the same way. So I know what the numbers are through July, August, September type of thing, or even May, June, July, August, and September. I have my numbers. I know what those ranges are, and I adapt my strategies accordingly. And I do find that, again, it picks a direction. There's that lack of volatility. It'll just continue to move. Maybe not have the volume by time to support it, but it's not the up and then all of a sudden retrace the entire move. That's something else that I notice. It can make some decent moves and it just trends nicely, right?
Right. Yeah, I agree. And what about you? So are you a big vacationer in the summer?
Oh, I wish I was.
Does Canada have summers, or is it just winters? No, that's what we hear. That's the rumors in America,
Yeah.
anyways.
You know what? To be honest with you, for the last 15 to 20 years, the industry that my family has been in has been very dependent on this summertime. So that's our busiest season, working in construction. So it hasn't been, the opportunities have not been there to vacation, except during, say, Christmas and the low time. So December, January, February, when people aren't really doing a lot of renovations and a lot of construction at that point. That's usually the time when we want to have a vacation. It suits us best.
Okay.
So it doesn't play into this particular scenario. In fact, it's frustrating for me because I'd rather be trading, and there's a little bit of an imbalance.
You're in a very cyclical industry, which I get fully.
Absolutely.
But either way, your attention would be a little bit more diverted from the market in the summer months than it would be in the winter months.
Yeah, and during the summertime, I'm less likely to be hanging out at the computer. I will get my trading done and I'll be done and gone. I mean, it's great where I live right now because the market's open at 6:30 in the morning, so I can be done by 7:30, 8:30, 9:30 in the morning and still have the entire day to go and do things. And
which is
it's
phenomenal. Yeah, I think the one interesting aspect of trading, and like when people get into it, a lot of them are like, yeah, I want to quit my day job and I need to free up more time and I want to do this with the family and stuff. And then I'll talk to somebody and they're trading at like 3 p.m., 3:30 p.m. I'm like, you traded your job, which is fine, but then you chose to sat there. I think you're missing the point as to your original. you just got lost somewhere along the way as far as what your intention was. But yeah, I like the concept of just you have a couple hours a day. You make potentially more money than you would have gone into work on a full 8-9 hour day of working somewhere, and then you truly have the time that you want to do something, whether it's to spend time with family, vacation, build a separate business, have another income comes, whatever you choose to do. But it's mind-boggling sometimes that people are instead of just spending 8 hours at a job, then they'll just switch over to spend 8 hours at a market, and usually like the first hours they're good, and then they give it all back in the second half of the day anyway. So
but here's the problem. You know, a lot of people, they want to quit their day job because they hate their day job. They want to quit working, period, because they hate working. And they may use the excuse that they want to spend time with family, they want to do this, they want to do that. And that's all great. You can do that as long as everybody else can also do that, but you need to be doing something that you enjoy. And if you don't fill that time with your family and friends with things that you enjoy, it's going to be very easy to be distracted into something different. And the reality is that if you find something that you really love doing, it's not work. And I know for myself, one of my biggest challenges is doing just that, is stepping away from the computer and not trading, because I love the markets. I love learning. And if I'm not actually physically trading, I'm talking about trading. I'm back trading. I'm coming up with a new class. I'm working with students. I'm doing something that's trading related because I love it. I can't imagine not doing it. And for me, that's a challenge. It's my family has to pull my strings to get my attention, and that's not a good thing. I need to be able to work through that and step away from this and say, okay, you know what? I need to put some attention towards them. Now, the last couple of years with COVID has made that very, very difficult because there's not a lot for us to do. And I'm not the type of person that likes to sit in front of the TV and just watch TV or do something like that. Just because I'm breathing the same air doesn't mean that we're spending quality time together. So that's been my biggest challenge. And I don't know how you deal with that, because you have a family. You also really love trading. You are a mentor. You're a moderator. You're a trader. Like, what are some of your tips for that?
It's difficult. It is. I think because for one aspect, like the markets are fun. Like I like other people like, hey, you want to go? You want to watch the Knicks? I mean, maybe not the Knicks. Nobody sees them anymore. But like, they go, hey, you want to go see a baseball game? You want to catch a football? Like, that's fun. Like, and I like doing that stuff too. But like, I'm like, nah. Like, this is my excitement. So like, I'm getting, I get that satisfaction every day from the market. Whether it's a winning day or losing day. Like, I know long term fall back on the plan, but like you get that satisfaction. I think the one part that I think it comes down to perspective, where people that are maybe not as passionate about the market, right? And you still have to kind of like the market to trade the market. Otherwise, it's going to be same thing with anything. Like, if you hate your job, it's probably because you're not going to invest really a lot of your time and really full effort into that job. But people that quit their jobs, they start off looking at the market as a tool to get to where they actually want to do. But then eventually, somewhere along the path, that tool to have their life just became their life. And I think that to me is like, it's just confusing. But I mean, on the same sense, like the same things that you said, like I still love the market. Like, so if the market's open, I'm still going to check it out. But you have to, for me, I had to actually physically be like, okay, I'm done with the market at this time. I don't care what happens. I won't check the app. There's a certain point of the day where I want to take care of this, and I make sure I cover that basis. And it was in the beginning, like I was definitely heading down the path where I was sitting there like all day, just waiting for a trade, even if I didn't take a trade, it was just still fun to watch what was happening, watch the news that was coming in. So there's a lot of excitement, but you have to, I think with anything, it's all good in moderation.
Yeah, no, absolutely. Absolutely. I guess the way I look at it too is if you're trying to eat healthy, you need to have healthy snacks kicking around. And the same token, if you really enjoy trading and you want to take some vacations, you need to plan those to make them exciting, make them something that's going to be enjoyable. If you don't plan for it and you just say, okay, well, I'm going to have a vacation or it's the weekend, and you don't have anything planned that's really going to excite you or that's going to take your attention or captivate your attention or be something that is scheduled that you can spend with family, it's going to be very easy for that distraction, that old habit to kick back in. So I need to make sure that I have things planned and scheduled.
Right. And I think too, once you schedule something, you have something to look forward to.
For sure.
And then the market, which was designed as a tool for you to do those things, actually become a tool, because now you have a reason why you've already made the money to pay for that vacation. You've already made the money to go out on that date. You've already made the money to send your kids to school, and you're using the market now as a way to pay for those things that you wanted to do.
Absolutely.
As opposed to, I'm just here in the market to just make money and no intention of what you're going to do with it. And then you 5 years later, you find yourself in a position of like, I just trade the markets all day and that's my life. I don't want that to be my life. I love to do what I do, but I don't want that to be my life. I'd rather have other aspects of it grow and develop, as opposed to that's the only thing I do.
Fair enough. You heard it here, guys.
But I believe we only have limited time left.
We're done.
We do have that contest going on. If you want to just recap the rules, entries.
Yeah, so we're looking for, last time was your trading plan. This time we want you to back trade your trading plan, and preferably I prefer at least 3 months of back trading, over 100 trades at least. Write them down, get the statistics on it, know your number. That is not the competition. That is just a challenge that we're putting out to you guys, for you to get better at your trading. You need to do it. And, but for the contest, what we want you to do is record 3 trades, 2 back trades and 1 paper trade. None of this is with real money. This is just the back trading. You're actually going back in time and trading your plan. And when you paper trade, you're trading along the live market as if you were in a real trade. You're trading it, you're managing your stops, you're following your plan. We want you to submit those 3 trades to us, either Tracy@reallifetrading.com or Dan@reallifetrading.com, along with your trading plan, so that we can compare and see that you are following your rules that are laid out in your trading plan. Submit those, and once again, we will do a draw at the end of May for the next winner. And You'll get a 30-minute coaching session based on your what back trading session that you did with Dan and myself. And everybody that puts their name in will then also be put into a draw at the end of the year for a 2-hour coaching session with us. So once again,
awesome.
That's the contest. Best of luck to everybody. And you have till the end of May to get your entries in.
And I would suggest to make one of those back trade months May or June or July, just to see how your playing compares to some of the higher volatility months. Mm-hmm. But awesome co-hosting with you as always, Tracy. Thank you guys all for joining us for another episode of Pivot Podcast, and we'll catch all you guys next week. Also, we do have all the links below. Check out reallifetrading.com for the free education. We do have brand new rooms that have opened a whole new format as far as the live trading rooms. You guys can join us every single day, all day long for those trading sessions, and we'll see all you guys next time.